Introducing Ausbiz Capital GrowWise, a new fund which combines institutional insight and experience with a target return of 15% per annum.
Our fund mirrors SciTech GrowWise, backed by an 18-year track record with historical 21% average annual net return. With more than $1.45 billion under management, the SciTech GrowWise Fund is led by award-winning global portfolio manager Ivan Sherman. The same strategy is now available to Australian investors from as little as $5,000. Discover Ausbiz Capital GrowWise, investing informed by experience.
This program is brought to you by LGT Crestone, local private wealth expertise backed by the stability of a global presence.
Hello and welcome to the Global View on this Tuesday. I'm Andrew Gagan. Good to have you with us again here at Ausbiz. Let's check what happened overnight. Equity markets mixed as President Trump indicated he's open to discussions with the European Union on tariffs, while the EU warned of retaliation if no agreement is reached. And Bitcoin pushed further into record territory. Well, stocks on Wall Street closed marginally higher as investors look beyond the tariff turmoil to second quarter earnings, which begin tomorrow, the Nasdaq reaching another record high, helped in part by the Mag 7, of which Meta shares rose after Chief Executive Mark Zuckerberg said it would invest hundreds of billions of dollars on computing power to build super intelligence capabilities. Shares of Tesla initially advanced as Chief Executive Elon Musk said he does not support a merger between the EV maker and his AI startup XAI, but that he plans to hold a shareholder vote on whether Tesla can invest in XAI. Crypto stocks benefited from Bitcoin's bullish run, with it eclipsing $120,000 for the first time. Waters Corp sunk after the lab equipment maker agreed to a merger with rival Beckman in a $17.5 billion deal. And JP Morgan Chase shares rose ahead of its quarterly report as it kicks off second quarter earnings season. The US banks are expected to report stronger profits driven by trading and an investment banking rebound, while there's also a focus on guidance due to uncertainty stemming from the US trade policy. Well, the European Union accused the United States of resisting efforts to strike a trade deal and warned of countermeasures if no agreement is reached to avoid the punishing tariffs President Trump has threatened to impose from August 1st. The President, meanwhile, saying he's open to further discussions with the EU and other trading partners before the new 30% tariffs take effect next month. And Mexican President Claudia Sheinbaum saying that she believed the two sides could reach a deal on security ahead of the August 1st deadline. Now, also, investors considering the prospect of a premature exit by Federal Reserve Chair Jerome Powell. While this indicated a patient stance on interest rate policy until the impact of tariffs are clearer, President Trump has been pushing for aggressive easing and has urged the Fed chair to step down. Meanwhile, FOMC member Beth Hammack saying she wants to see inflation lowered before she'd support a cut, saying we're not there yet on the inflation side of the mandate. I think it's important that we wait and see how all new policies that have been put forward are going to impact inflation. Well, the US 2-year Treasury yield rose to around 3.9%, the 10-year up to 4.43%. The US dollar index up slightly on the day. The Aussie trading at 65.5 US cents, in fact 65.4, and Bitcoin rising more than 3% overnight to hit a new high of 123,000 US dollars before easing, as investors bet on positive policy outcomes for the crypto industry. The US House of Representatives is set to pass a series of crypto-related bills this week, which could provide a regulatory framework supporting greater investment in digital assets. On the commodities front, oil prices easing as investors consider new threats from President Trump for sanctions on buyers of Russian oil that may affect global supplies. Brent crude futures around 1% lower at $69 a barrel. Copper was off around 1%, iron ore rising to $99 a tonne, and gold slightly lower at $3,342 an ounce. Let's get across what is driving US markets at the moment. Steve Sosnick joining us again from Interactive Brokers. Steve, welcome back. Good to see you. So, look, we've got a series of acronyms that would seem driving the market at the moment, be it FOMO, MOMO, TACO, take your pick. But would you say there's a risk of assumption here that markets assuming that those tariffs are not going to eventuate?
Oh, absolutely. I think the market has decided that, if there's even the slightest hint of a plausible outcome that doesn't involve the tariffs being immediately implemented, whether that's postponement, whether that's renegotiation, whether that's outright cancellation, the market will seize on that. I've been calling it the Lloyd Christmas effect. For those of you who are fans of the movie Dumb and Dumber, when he is told that he has only a 1 in a million chance of landing the woman of his dreams, he thinks for a second and says, "So you're telling me that I have a chance?" Yeah, and that's really, I think, what we're seeing in terms of tariffs. Because I just think right now so much money has been made by taking the under on tariffs that if we have even a slight chance for for something not to be implemented, the markets are going to take it. The problem is now, though, I think that it's fairly unrealistic to think that nothing is going to happen. I also think it's fairly realistic to think that something over and above the 10% baseline is going to happen when we think about it collectively. I'm not sure that's where the market is, though, and that can present a real problem.
So are investors and traders looking beyond this, though? As I mentioned there, of course, we're on the eve of earnings season. Is that now the focus?
Yes, it should start being the focus tomorrow, our time, when JP Morgan and Citibank and Wells Fargo, among others, basically sort of have the unofficial kickoff of earnings season. It's also a big economic week, actually, because we have CPI tomorrow, we have PPI the day after, we have retail sales on Thursday, and consumer sentiment on Friday. So that's actually a big week. We kind of got a little spoiled that there were essentially no economic numbers. There were literally zero today. There were literally zero last Monday, and I think like a total of 5 or 6 for the entire week last week. So they're going to come a lot more fast and furious. At the same time, earnings are going to come out. You and I have had this discussion, pretty much every quarter, how I think that we don't want to overanalyze bank results because they are fluky. No one else relies on the shape of the yield curve. No one else relies upon trading results. But I do think we want to listen to the conference calls to get the clues that are going to come, from people like Jamie Dimon and Jane Fraser and people of that nature, because they do have good insight into what customers, large and small, are doing and their credit quality. So that's really what to listen for. But also, I think the key this earnings season is going to be, companies are going to have to say something about tariffs. A lot of them got a pass last quarter by saying, we're going to withdraw guidance. We don't know. We're going to throw up our hands a little bit. And because the market was so deeply oversold, they got a pass. I don't know that the market's going to give them a pass this time around. And I think it will be very interesting to hear what they have to say, whether it's going to have some clarity, whether it's going to be cautious, or whether it's going to be in the form of an if-then statement. If tariffs are X, then guidance is Y, or if tariffs are something else, we'll give different guidance. That's going to be really the key as we go forward.
Well, once again, it's those known unknowns, isn't it, in relation to tariffs? And I guess further to your point in terms of that data with inflation this week, are you likely to get signs of those inflationary pressures emerging from those tariffs?
Not yet, and that's really kind of an interesting feature because we are going to get the June numbers, but it's kind of through mid-June, and the tariffs really didn't kick in until sort of the beginning of that period. As of now, it's not clear that the companies have passed along a lot of the initial wave of the tariffs, so it might not be reflected in consumer prices. It'll be very interesting to see if consumer prices and producer prices diverge. Right now, actually, the month-over-month core CPI estimate is higher, somewhere around 0.3% for a month-over-month, than it is for PPI, which is 0.2% for the core month-over-month expected. It could be fascinating to see if those diverge or flip, because the effects on companies, I think, are going to be more immediately felt once the tariffs really kick in. But it's a question of whether they've seen that effect yet or not.
Now, of course, the Fed wants to see the effects before they actually move in regards to those tariffs. That comes with that backdrop of uncertainty perhaps over Jerome Powell's position. How real is that prospect, Steve, that he could be gone before his term ends?
I think it's a finite probability, but not the majority case. It's clear they're trying to gin up something to get him out of there, and they're going to focus on this the costs of renovating the Federal Reserve. It seems like very much of a trumped up charge. No pun intended. I really didn't mean to say it that way, but it does seem like they're sort of fabricating something. I think the president realizes that firing him outright would be problematic. I think the market was sent that message very clearly when he was flouting, when he was throwing that out there originally. His term does end next May, so it's really just a matter of impatience. But I think it just bothers him that there's this person perceived to be standing in his way of lower interest rates. We got some a Truth Social post recently about how we have the strongest economy in the world in his eyes, and yet interest rates are too high. I don't really understand that one, but that's really what's going through his mind. He wants him out, and I think he just wants to pressure him out. And I don't know that it's this is the latest way of doing it is through sort of these the investigating the renovation costs.
Now, Steve, we began the conversation talking about that FOMO and MOMO in equity markets. Take a look at what's going on in crypto at the moment. Bitcoin going from record to record. Now, of course, a key week this week in terms of some regulatory certainty that's afoot. What are your observations of what's going on there?
Well, this is said to be crypto week in the government, where there are 3 bills that have a chance of advancing through Congress as we speak. It's sort of like someone flipped a switch pretty much Thursday after the close, or Thursday right around the close, and this kicked in. We did see Strategy now, resuming its Bitcoin purchases after taking a week off this week. I think that we definitely saw that bout of enthusiasm. And of course, once you sort of break out to new highs in anything, whether it's crypto or stocks or commodity, you do see people jumping on that trend. And we did see that really accelerate. But I think right now it remains to be seen whether this is a buy the rumor, sell the news type of move. But we're certainly in the buy the rumor phase, and for good reason. I mean, if there is, it's interesting because the whole premise of crypto early on was that there was this system of payments that was outside the range of governments, and this thoroughly almost anarchy that you could impose on the financial system. And now, of course, there's a craving for regulation, because now they're realizing that the real money is made from regular people and larger institutions moving money in there, and they're not really eager to do that without a better regulatory climate. So I think it's an interesting evolution, and we'll see. It is a bit of a bet on the U.S. Congress. So good luck with that. But that's the reason for it.
Steve, great to get across what you are seeing in markets at the moment. Thanks for joining us from Interactive Brokers.
Thanks so much, Andrew. Take care.
Let's get across where we're likely to begin on the local market this Tuesday. A positive start, as indicated there by SPI futures, up some 0.6%. Stay with us. We'll get across that in just a minute or so.
This program was brought to you by LGT Crestone, local private wealth expertise backed by the stability of a global presence.